We'll just wait. Good evening, everyone. Thank you for joining in on time. Before we invite our esteemed speaker, so I'm going to start the session. Going against the trend of giving 5 minutes for everyone to join in, we are going to be very prompt and particular and respect your time, whosoever have given us the opportunity of actually starting this session, being here as an audience. So, good evening, everyone. So, before we invite our esteemed speaker, I have the pleasure of welcoming CA Kalpana Thakur to the virtual stage for her opening remarks. Driven by a deep passion to make a positive impact, CA Kalpana Thakur, along with CA Poonam Pathak, co-founded Friday Fleet. Kalpana is an impactful speaker, a soft skills corporate trainer, as well as a motivational speaker. Beyond her professional expertise, she is a dedicated social activist, a seasoned Toastmaster, and brings an extensive experience from the audit and assurance domain as well. Please welcome CA Kalpana Thakur.
Thank you so much, CA Sunita Rathod, for the wonderful and heartwarming introduction. I, CA Kalpana Thakur, welcome you all on our one of the special episode of Friday Fleet, where we are going to talk about virtual CFO. We are having our esteemed speaker to discuss on this topic. Before we will delve into the technical discussion, many things we are working, and it gives me immense pleasure to announce that now I'm not alone. Me and Poonam, we both are not alone. We are having our wonderful core team. Sunita Rathod, CA Sunita Rathod is one of them. CA Harshali Salvi is here, and we are having other member as well. Formally, we will announce this soon. Together with that, we are working towards upliftment and growth of our community. And in this, we need your input, your feedback. Apart from having these technical as well as self-help topic on which we are having our discussion every Friday, what mix and match or the new thing that we can do to grow in many fold. Many things are in discussion, and to implement anything, we will reach out to you first to have your input. And first and foremost in the list is inviting you as a speaker working on your public speaking skills. There are many things in store, but without taking your much time, because here today we are on the topic of virtual CFO. This is something as a female taking care of our kids and the things around us, working on our professional skill set. That's why it was there in our bucket list to come up with the session. And here we have, it's called Manifestation, Sunita, right?
Yeah, sure.
So I was thinking about it from last couple of weeks, and here we are. Take maximum out of this session, and I wish all the very best to all of you in your journey of this new financial year. This is the first session we are having in this financial year 25-26. Wishing you all a very wealthy and successful year ahead. Over to you, Sunita. Thank you so much.
Thank you, Kalpana. It is my pleasure to introduce today's speaker, who has a remarkable academic background. Our speaker is a chartered accountant, a company secretary, a cost accountant, and a law graduate. An exceptional combination with which he masters the world of business and finance. Over the past decade, he has successfully navigated multiple industries, including aerospace, retail, logistics, FMCG, playing pivotal role in business finance, financial strategy, and ERP implementation. His professional journey includes leadership roles with industry giants such as Tata Advanced Systems, Aditya Birla Group, ITC Limited, Coffee Day Group, and sells some technologies. What sets him apart is his transparent, solution-driven approach. A self-starter and problem solver, he excels in cross-functional collaboration, business process optimization for sustainable growth. His expertise spans key areas such as financial planning, forecasting, ERP migration, internal controls, and compliance, among others. Beyond his financial acumen, our speaker is also a state-level football player, a karate champion, and an endurance sports enthusiast, bringing the same discipline, resilience, and strategic mindset to both sports and business. He's also passionate about mentoring students and professionals in finance and taxation. Today, he will be speaking on the topic that is rapidly reshaping the financial business landscape, the virtual CFO services. As businesses, especially the startups and SMEs, increasingly look towards strategic financial expertise without the cost of employing full-time CFOs, the role of virtual CFOs is emerging as a game changer. And we will be having a discussion through the knowledge as well as practical experiences which CA Harshith has encompassed over his professional career. We'll get valuable insight and expert perspectives from him. Please join me in welcoming CA Harshith. So Harshith, before we begin, you take the floor. I just wanted your confirmation, if you're comfortable with me asking you a couple of questions once you've shared the initial intro as to the roles and responsibilities, and what exactly is virtual CFO, from that perspective.
Yeah, sure, Sunita.
Thank
you for your introduction, and I thank Kalpana Thakur. It's a good opportunity for me to present myself over here. It's again sharing of things, sharing of knowledge, which is something very critical. That is what is needed now. And then in the industries today, or especially our fraternity, chartered accountants community, we cannot work in isolation. That has been proved. So it's definitely we need to work in a collaborative manner, and it's obviously things needs to be aligned from all of our end. Multiple minds needs to be met. Come to a consensus, and then the deliverables needs to be given. Yes, I am very privileged to be part of this, and thank you for your introduction again. Yes, starting off with this virtual CFO concept. Basically, why this need came? What is the purpose of this virtual CFO? What this fractional CFO means? Let me just share my. I just made some small PPT. Yeah, is my screen visible?
Yes.
Yes, great. So basically, I just want to take you through the agenda as of now. What would be covering in this particular topic or session? Basically, what is a need for this virtual CFO? What happened to arise the concept of this virtual CFO? What came into, what brought in the concept of fractional CFO in the industry space? That too for a chartered accountant, where in a traditional practice, where in general filings, ITR filing, representing before the income tax. That used to be our core area, right? Suddenly there's certain trend that is moving around in the industry where people talk about fancy words. Some startups comes into picture, certain words pertaining to virtual CFO comes into picture. What is actually needing? Why is this needed? And what is the industry demanding? So that is something that we would be covering as a part of our agenda. Then what is the size and scope? So basically suppose if at all we venture into exploring this particular opportunity, what is the potential that we have? What is the scope that we have? How much is the bandwidth? And at the same time, how good are the opportunities that we are likely to get in this particular area? And then probably once we enter into that area, or probably once we get an alignment to understanding with respect to what is the market size and scope, then comes with what is expected. Obviously, when the moment we say we are a chartered accountant, we are a professional, we are certain service deliverable professional, at the same time, there are certain expectations. What are those expectations? And finally, is there any relationship between traditional practice and virtual CFO? That is also something that is very important, because see, today around 80, I mean almost 90% of the chartered accountants today are very comfortable with our traditional practice. No doubt, that is how the space was, that is how the market was, that is how the area of potential was. But now, is there some connection? I mean, having been into this traditional practice, suppose if you choose a career of virtual CFO or fractional CFO services, is there any linkage between that? That is what we would be understanding. And finally, probably we'll understand the overall execution. How do we execute these services? How do we collaborate with people? And how do we actually provide our deliverables? This is what I would be covering in this session, probably a short session. With this, I can go ahead. And again, the interesting question being asked by Sunita, what virtual CFO means, what actually it means. So for going that, let me just try to help you out. Today, in Indian market, in Indian corporate world, there's something that has erupted suddenly, startups. What are these startups? Basically, why the concept of these startups? What led to the rise of these startups? Basically, today, again, people want perpetual businesses. People want a stabilized business, formal business, basically an organized businesses which are running in today's world. That is wherein the startups come. I just try to take out certain small statistics which is available on the internet. So basically in 2023, wherein you see there are so many startups, around a lakh. I mean, that would even be lesser in 2025. It has significantly grown. The market of startups which we see today, it has grown so much that even a traditional business, a small businessman want to establish a private limited company or an LLP in order to have an organized structure for his business and then certain perpetuality or a going concern thing for his entrepreneurship concept. So the moment when this concept of startup comes, what generally happens in the industry? See, it's all starting. I mean, the word itself says you're starting your business or you're just entered into that market. Typically, generally, the founders or the co-founders come up with multiple ideas and they want to execute and all of that. So generally, the major focus of these founders would be towards actually executing their idea and implementing their idea. And then today we know in the space of this competitive world, marketing and advertising happens to take huge time. Getting certain significant market share for any startup takes, I mean, significant time, significant efforts, significant cost gets incurred in order to capture certain market. So at the same time, compliances are also a parallel thing, be it your financial compliances or your legal compliances. This is something that comes parallelly along with your market share increase potential. So during that space, founders or probably businessmen actually do not want to focus majorly on this compliance part. Or let me put it in this way. Let us say some techie, or he has established certain artificial intelligence startup. His product is something that is new to the market. Now the challenge for the startup founder is to ensure that his product is actually understood in the market. A major challenge for him is to make people accept his product. When he is working on that, when he is putting his fullest efforts onto that, at the same time, our compliances come into picture, wherein it expects the founders or the co-founders to put in significant effort on the compliances as well. That's a very simple example. GST returns. The moment you file your, you get registered for GST. Every month you need to file your returns. If there is certain output GST, you need to pay your output GST. At the same time, if there is certain input GST, you need to calculate. Do we really think founders have time to work on this part? So only option for them is to hire certain employees, hire certain people, hire an accounting team or a finance team. Generally today, thankfully, our traditional practitioners also take up this responsibility, wherein it's like a periodical, repetitive tasks or something that gets outsourced to the traditional CFOs, traditional chartered accountants or practicing chartered accountants. I'm just giving you an example as to how a virtual CFO becomes a need over here. When
If I
now the
may,
founder,
yeah, if I may interrupt, just asking a very obvious question out here, but practicing chartered accountants can hold the responsibilities of a virtual CFO profile. They can provide these services.
a practicing chartered accountant definitely can hold a
Can pro
responsibility of a virtual CFO. That is
Right.
wherein, and probably one of the topic which I'll be covering it was what is the synergies between a traditional CA practice as well as virtual CFO practice. Again, it depends on the bandwidth and the time and space which a practicing chartered accountant can actually put on the floor. Based on that, he can plan. Things can be planned out. And there is definitely scope for a practicing chartered accountant to enter into the space of virtual CFO concept. So here, what happens, Sunita, generally, when it comes to a founder or a co-founder, he actually wants to focus on his own product, wherein he doesn't have finances or financial capability to hire a finance team. So that is where the concept of virtual CFO or fractional CFO come into picture. A virtual CFO comes over there, he comes to his aid and he tells, boss, I will take care of your financial aspects. I will take care of your compliances. You focus on your growth. You focus on your marketing. You focus on your product development. You focus on your R&D aspects. So it's a big relief to the founders. It's a big relief to the co-founders. Wherein, it's a major what seems, let's say for example, a compliances or a financial aspects or MIS or accounting, which happens to be a major bundle of tasks. It's now very easily outsourced to some expert who can actually take over it with certain, in a professional manner, in an organized manner, and also provide certain insights to his business so that he can grow his business. So again, now
I
coming, yes,
I
Sunita.
have a question relating to that. So when we are talking about data and a chartered accountant dealing with virtual CFO role has a lot of parties or companies that you could provide that service to. So the it raises the concern of data integrity and the confidentiality aspects. So how does a virtual CFO
Yes.
incorporate that the data has, do they have necessarily have to keep in robust data security? They have what are the ethical boundaries within which they have to work? Are there any specific sets and regulations set for them to provide these services? So that I bundled up 3 or 4 questions together, but they just popped up in my mind, and I thought that I'll leave them
No.
for you
This is
to answer.
actually an apt question wherein a data privacy aspect comes into the question. See, uh, let's take a traditional chartered accountant. Okay? When a traditional chartered accountant needs to provide any sort of certification for a startup, he definitely gets into the data. There are obviously certain NDAs or certain set of compliance agreements or MOUs which will be entered into between a traditional chartered accountant and a startup founder or the company or the corporate as such. Similarly, it works in the same fashion. See, it's like this: the weightage. The co-founder or a founder looks it in this way. What is my primary aspect? Is it my data protection or is it my cost? If it is data protection, yes, you are right. Maybe he might think twice or thrice prior to giving off that responsibility or outsourcing that function to a external fractional CFO. But today, everything revolves around money. Everything revolves around profits. See, the moment you become a profitable organization, the sooner you become a profitable organization, the sooner you're going to set up a team. Right, the moment you set up a team, then you have your own strength wherein you can take care of your finances. Now actual data confidentiality or the safety or integrity of the data will be protected even more better. So it's that way. That is how it works. So do you want data protection from day one, and are you ready to incur costs? This is one alternative. Or do you want to compromise on, I mean, I do not say compromise. Do you want to take a risk by entering into certain NDAs and appointing a what you call a trusted chartered accountant or trusted fractional CFO, and then as soon as possible you set up a finance team, as soon as possible you become a profitable company, then you have your own team. So, but today's space in the market is looking for second alternative. It's actually second alternative. See, the reason is any startup which comes on the floor, today they want to, as soon as possible, they want to grow. They want to increase their reach. They want to increase their brand value. They want to make sure that the product is reached each and every, each and every customer. I mean, as many as so much. I mean, as much as so much customers as possible, or in geographically as soon as possible, it can have a greater market share, multiple locations as soon as possible. That is the major objective today. In such cases, definitely, again, that is why the tag of chartered accountant also comes into picture over here. Basically, a chartered accountant means trust. A chartered accountant means this integral or this confidentiality. I mean, we all know, right? Probably in our professional ethics, that is what we get to know. One of the major aspect for us is integrity. One of the major aspect for us is confidentiality. Even if you are signing as an external or statutory chartered accountant, even then the data safety or data confidentiality is something very relevant for an auditee. The same thing applies over here also. So as soon as possible, turn out into a profitable company. That becomes an objective of any startup today. And today, as I told, like around, I mean, cities like Bangalore, Pune, Hyderabad, and some parts of Delhi and Mumbai, which has actually become startup hubs. And everybody or every professional or every person, intellectual person who is coming out of with an idea are pitching and starting off private limited companies. And that is where this concept of startup came into picture, which is actually driving the need for professionals. And today the market has also accepted the reality. Yes, no doubt data or confidentiality is something important. But there is somebody who can help us, who is a chartered accountant, whom we can trust on our data integrity. And moreover, Sunita, when we say virtual CFO or fractional CFO, it all comes based on referrals. I mean, very rarely it comes on a one-on-one basis. Very rarely. Let's say, for example, me being a virtual CFO, CA Harshith approaches around 20 or 25 startups. We hardly get one startup who accepts our services. But that one startup who is very comfortable with CA Harshith, who is very comfortable with availing services from CA Harshith, who has built certain trust on CA Harshith, will definitely refer 5 or 6 more startups. So this is how it works. So the moment you get a referral, it means that the trust is already built. And then the market is already built. The brand value of a virtual CFO, the brand value of a chartered accountant who is ready to engage in the services of virtual CFO services is built. Then, I mean, the moment you start getting referrals, then it is easy. I mean, then the story turns in a different way. So that is where it is. But again, like you said, yeah, data confidentiality also is very important. That is wherein in fact, chartered accountants themselves suggest, they themselves come forward. I mean, basically in my case, I myself tell to the clients, let us enter into a proper formal NDA, restrict myself to what is my scope, what is your scope. Majority of the cases, what founders tell is, sir, it's better the scope be unlimited. Again, wherein we need to apply our brains with respect to, we need to choose what we need to take up. Again, we cannot, that's what, that's a game wherein with respect to what needs to be taken into consideration, what should be our boundary levels, that needs to be decided by us. Yeah, I think one of the participant has posted a question. What are all the scope of work for virtual CFO? Very good. I was actually coming to that. When it comes to the scope, Yeah. Okay, let me just try to tell you this way. So this basically, the first thing when I say scope, the first thing that matters for any startups or any corporates is compliances. Be it GST compliance, be it direct taxes, be it again corporate law, and also be it any internal bylaws, or suppose if they want to, then most of the startups again are funded by lot of PEs or venture capitalists, all of those things, and they impose a lot of compliance requirements, be it monthly reporting, or be it certain strategies that needs to be followed, or be it certain documentation that needs to be maintained, be it certain SOPs that needs to be followed. All this comes the very first priority for any virtual CFO is compliances, taking care of compliances. Then the second thing, that's the actual crux, something that is completely different from a traditional CA practice, wherein a virtual CFO enters into valuation aspects, valuation of a startup. Today, yeah, the startup ecosystem is built on valuation. So it is built on fundraising. It is built on market value, brand value of the startup. So for that, the primary preliminary aspect is your planning, basically FP&A, a traditional FP&A. Suppose if somebody is into the corporate, if somebody is working in corporate, this is a very common role called as FP&A role, financial planning and analysis, or financial analyst, or MIS role, or a management reporting role. These are something roles that are. So this is where startups need virtual CFO's help. So definitely when you say you're building a forecast, building a budget, it is accompanied with multiple things. The moment you say your future plan is so and so, this is how your numbers will look like after 3 years, or after 5 years, or after 10 years. Now the founders are very keen with respect to what can be done in order to achieve that. That is point number one. Point number two, what can be done in order to achieve something more than that? And what needs to be taken care in order to ensure nothing falls short. So these are the three insights that will be coming from the very first aspect in the slide, which I have mentioned: strategic planning, budgeting, and forecast. So in simple terms, I would call it as financial planning and analysis, FP&A, or MIS, management information system. So here again, when I say this FP&A role, here investors also seek the same thing. See, when investors have put in money into the startup, they also expect multiple reports. It's not one or two reports. Huge set of reports will be asked from the startups. Now, actually, certain founders who are away, who do not have much knowledge on the numbers, or maybe who don't have time to spend, or who do not have sufficient bandwidth to analyze their financials or numbers, they would actually seek our help. And this will be a very productive help. Even suppose if you, if you believe me or not, this particular role is something very satisfying role. As a virtual CFO, when you actually work with businesses, when we try to deliver them the plans for the future, it's very satisfying. The happiness. So basically, it needs to be felt. Definitely, many of us would have felt in some part of our life during our career or something like that. This is something of that which triggers our adrenaline. So basically, it triggers our energy. So basically, what happens over here is what is that startup actually, or what are these corporates actually looking at a shorter sight? What is a foresight? What is a foreseeable future? Probably next down the line of 5 years or 10 years in terms of numbers. And these numbers would be adding. There is something in addition to the numbers that is basically insights, financial insights. Mere numbers anybody can do. A chartered accountant need not sit and do. Today AI has become so powerful. AI is giving us forecasts. AI is performing a budgeting analysis. It is building a financial model also. Provided you give a prompt instructions to it, it is building. But what people need is, how are this forecast helping them on three things majorly. First thing is, what needs to be done to achieve this forecast? What needs to be done to overachieve, basically to increase the projected numbers, and what needs to be done to prevent themselves from falling short of these numbers. Those are the three objectives which comes from this strategic planning, budgeting, and forecasting. And the second scope is basically obviously the fundraising and investor relationship. So today, any venture capitalist you take or any, investors you take, they have a very strong due diligence team. there are experts in the industry who will be part of that team performing due diligence on the startups because it's their money. It's their money who has been put into this startup, and these startups are running their business. And those investors are of certain expectation that startups give them something or corporates give them something. If so is the case, the due diligence team is very strong, very stringent. Experts sit there. Again, chartered accountants also would be part of those team. At the same time, IIMs would also be part of those teams, and industry experts would also be part of those teams. These people are actually cranky on numbers. They want so much data, huge data. A small depreciation schedule, which we prepare for our audit, a depreciation schedule which would be asked by the investors would be in a different way. They would ask, it's multiple things linked to one small depreciation schedule. So multiple formats, multiple ways. Again, these things, who can crack this is definitely only a chartered accountant who is already good in numbers or who has already partnered with the businesses, understanding the business. So again, this is the second part. One is investor relationship, wherein series of reportings would be asked by the investors. Or now when fundraising actually needs to happen, again, prior to actually investing fund, when any startup goes for a pitch, the due diligence which will be carried out is complete 360-degree due diligence happens. Your business due diligence happens, your market due diligence happens, your product due diligence happens, the R&D due diligence happens, then our financial due diligence, which basically everybody is interested into this, including regulatory authorities, including the founders, including the investors, and everybody have their own interpretations. Bringing all of that into one single space, one single bucket, and then providing them a path forward. That becomes a very critical role of virtual CFO. And then, finally, this we have covered. I told the very first thing itself, what any startups expect us to do is compliance aspect and internal controls. When I say internal controls, SOPs generally. So the industry SOPs it could be, or the startup, the corporate's bylaws or its own SOPs, or investors would be seeking certain SOPs. These SOPs needs to be under control, which we will be ensuring as a finance leg. Obviously, finance function in any company you take happens to do this job of protecting the. It's more like a goalkeeper. The forward players are completely different. The goalkeeper's duty is completely different. Goalkeeper never enters into the market, actual space of game. He is restricted within his own boundary, where all his duty is to protect the goalpost, ensuring that the football doesn't get inside. So that is what comes over here, ensuring internal controls and compliances, which basically any finance function in any company, that's the very basic function. The same thing would be expected of a virtual CFO also. Since we already know about these internal controls, we would already be working on these internal controls, it becomes one of a add-on it becomes a synergy with respect to traditional practice over here. And finally, our cash flows. See, earning profits is one thing. Having actual cash in the bank is different thing. We all know that. Let's say, for example, suddenly if you want to reduce your profits, we make significant provisions. Probably the depreciation methodology will change. Some other methodologies will change. Or certain aspects we tweak. And the actual profit need not be the actual cash flows the startups are earning. Today, when we say, see, as per the status of 2023, around 1 lakh startups in India, if we just sit and analyze those 1 lakh startups in India, around 90,000 of them are no longer surviving in India. The reason being they have cash flow issues. And it is a well-known reality. It is a market reality. Everybody knows that. Cash flow is something very significant, especially when something like COVID-19 comes into picture. It becomes an alien to everyone. And we all know even for a chartered accountant, let's say, for example, a traditional chartered accountant, a practicing chartered accountant, getting your receivables, following up on your receivables, ensuring your receivables get converted into actual money. We know what is a task, right? Same thing happens for startups also. So hence managing of the cash flows is one of the important thing, wherein constant monitoring of the cash flow models, constant monitoring of the receivables, constant planning with respect to what extent of payments needs to be made, and ensuring timely safeguarding of the additional surplus funds that is available in the current account of the startups. That is something very important role, which basically a founder will not be capable of doing it. I mean, if let's say, for example, if a chartered accountant himself is starting his own corporate, he might be able to do. That should not be an issue. Whereas a non-finance graduate or non-finance professional or a non-finance person, I mean, it's very fair enough to admit that they would not be capable of managing their cash flows. That is where generally a lot of startups are failing today. I mean, the ones who have ensured the cash flow is strong enough, they are surviving. They are easily entering into IPO space. And that is how it is. I mean, that is how it functions. Be it any business, even need not be only startup, need not be only corporate. Even if I take a small firm or a proprietorship concern also, cash flow is something very important because profits are different from what cash balances people have. So that's where it is. And that's, I mean, this is the very brief scope. And when we enter into it, so basically, again, when I say scope, something very important, the moment we take over a role of virtual CFO, it means that your entire finance function, entire accounting function is in your hand. So you believe it or not, even a virtual CFO's monthly consultancy invoice will also be processed by himself. That is the amount of delegation startups give. So, I mean, let's say, for example, I am virtual CFO of any startup. My bill is processed by me. Only approval happens. I mean, founder or CFO or some hierarchy over there approves the transaction. But uploading of this payment, all of those things would be taken care by myself. It's like that. I mean, so basically the amount of delegation, amount of trust in a virtual CFO, I mean, just to tell you how much people believe. Again, at the end of the day, maintaining that trust is very important. Again, as I told you, any assignment of virtual CFO that we get is maximum through referrals. And who would be referring this? Investors can refer. Or any other client who has availed our services, they can refer. Or any investor of a client. Let's say, for example, there is a startup A, there is investor B. Investor B has invested into startup A. Now, investor B would be observing the compliances in startup A. Investors would be observing how the internal controls are set up, how the cash flows are being managed, how the reporting is being made to them. That observation is very evident. That is more than enough for them to refer a virtual CFO or a fractional CFO to some other investee companies of his. So that's how the market is. Today, in my case, majority of my referrals come from either investors or any of the client. Majority comes from investors. And probably one or two might come from the client whom you have already worked with. Having said that, again, something very important that needs to be kept in mind is we cannot be overloaded. See, because your entire finance function is in your hands now. That's a very careful strategy that needs to be ensured such that you end up taking multiple assignments. Then it's like, half-baked cake in all of these companies. No, that should not be the case. Until and unless you have bandwidth, don't accept new venture at all. So ensure that you have sufficient bandwidth. Try to start with one, then two. Probably build a team such that you can take up multiple. So that is about the scope, probably, which is something very important for a virtual CFO. How can we explore these virtual CFO roles, Sakshi Agarwal? Yeah. See, okay, to get into this space is very, first of all, we need to try to understand in the market who is actually needing us. who are the ones who are actually not capable of building a team, building a finance team, who actually needs there is a dire need of them needing a chartered accountant to help him set up a finance team. Till then, handle the finance and compliances. That is how we need to explore. As I told again, referrals is first one of the thing, and second thing, we need to approach clients just like how any activity of a professional functions. We need to approach people. We need to involve in a lot of startup pitches. We need to build that network. That's how it is. Yes, Sunita, you have something to tell?
Yeah, I was just requesting that if you could go through your slides first, share your information, because if we keep taking questions, your flow might be disrupted. So I just wondered if you could do.
No worries. Okay, fine. Yeah, this part we have already see again wherein I was coming from. Meeting the expectations as a virtual CFO is also very important. See, again, there may be I'll just give you an example. Recently, there was one situation in which one of the startup, it's basically e-commerce startup wherein they involve into a lot of transactions. Multiple people do transactions using payment gateways like Razorpay or Paytm or something like that. The bank account of the client, there was a lien marked on bank account of the client. Because some customer, they raised a complaint saying that there was some scam call that had come to them, that the company is asking them to invest in some portfolio mutual funds, some stock market. When the customer actually put the money, the person is gone. And unfortunately, the fraudster happened to use the name of the client. So now the bank account of the startup has been frozen. So basically now here, as a CFO, as a virtual CFO, it will be our responsibility to ensure that the bank account is defreezed. So now we need to coordinate with the bank. See, that's what the scope doesn't get restricted. So the moment you say, see, now why is the scope not getting restricted in this situation or in this example when I said? It is pertaining to money, point number one. Second thing, it is pertaining to bank account. Third thing, it is pertaining to lien mark or certain police case that has been filed on the company. Again, compliance aspect or legal aspect that is coming into picture. Now, the promoter or the founder or the co-founder who actually is very much involved into developing his product, ensuring that his product is growing or market share is spreading, will he really have bandwidth to focus on these aspects? But at the same time, this is not something that can be let go. We cannot let go this issue. Your bank, it's your bank. End of the day, it is your bank account. End of the day, it is your cash. Yeah, it's your business operations. Vendor payments needs to be made on immediate basis. Then in such case, I took an extra mail, went ahead, tried to understand why that lien mark happened. What is that fraud? Who made that fraud? Obviously, we will not get to know who is the fraudster and all. At least we'll understand what was the situation. Then I myself spoke to the customer who had raised a complaint. Was this is our company is so and so. You had made a transaction with us, which is a genuine transaction. It is not to be mixed with that fraudulent transaction, which is some investment or something else. Then the customer agreed. He gave an NOC. That NOC was submitted to the banker. Now the banker defroze the account. So these type of things come into picture, which we cannot build separately. It should be part of our virtual CFO assignment. So that is what, like, though we customize our scope, though we make a scope at the time of, see, it's quite common, right? Any audit services also, we take very first thing we do is set up a scope. In this case also, it's quite common. We enter into scope, but the moment you take up ownership of the business, the moment you take up ownership of the finance function, the finance operations or the accounting operations, now the scope, though there is scope, business, there is an expectation that a virtual CFO crosses that scope. That is actually a plus point for building a relationship. Very simple. So now suddenly when I call the founder and tell him, don't worry, your bank account is sorted, your lien mark is removed, I have taken care of all of that. Now just imagine the confidence levels he'll have on me. Just imagine the amount of trust. Now you imagine how he would refer me to other persons. So that is what it is. It's purely a business. I mean, it's an understanding based on the situation and circumstances. But at the same time, yeah, we need to have our limitations also. If somebody is insisting for a fraudulent transaction, if somebody is actually insisting of managing the books of accounts, if somebody is actually insisting for MIS purpose, generally what happens, MIS means management information system, the reports which management expects, that is called MIS. So basically the profitability which management decides. If being appointed as a fractional CFO or virtual CFO, now if the founder or the co-founder or the management of the company is insisting us to deliver the numbers the way they want, now our actual auditor mindset will have to play over here. So that should be the restricted area, wherein what is right, that, I mean, we are always, generally expectation of chartered accountant is to do right things, right? I mean, we cannot take any shortcuts. And it will be very tempting to take shortcuts, because now entire finance operations is in our hand. So basically your entire accounting is in our hands. So now it's very tempting to take shortcuts, but restricting ourselves from that shortcuts is something very important. Though it is being expected, there should be a very strong no. Otherwise, the virtual CFO will become a failure. The moment he becomes a puppet in the hands of founders or the corporates, he becomes a dummy. So we need to ensure that with respect to what is right, yes, and what is fair, yes. But at the same time, there's nothing wrong in exceeding our scope to go take even extra milestone to provide a perfect deliverable so that the actual business runs smoother. So that is what it is. And again, the last point, if you see, given proactive insights and monthly reviews. As I told you, like, I mean, this FP&A, financial planning and analysis, or MIS reports, that become one of a important task for any virtual CFO. That is part of his checklist. I mean, every week you have one MIS to prepare. Every 3 days once you need to prepare one report. You need to share certain report. Every bi-weekly, I mean, every monthly, investors would be expecting us to share them certain reports. If so is the case, preparing report is one thing. From those reports, from those financial statements, or from those financial documentations, how valuable insights we are providing to the founders, that becomes more important. So we should make sure that the numbers speak rather than the numbers are themselves. So now the investors are also happy because they can take calculated costs. The founders are also very happy because they also know what needs to be done next using those numbers. So again, that is a role of CFO. Any CFO you take in a corporate, that is what CFO does. He needs to ensure that business functions. At the same time, he needs to ensure that there are certain corrective actions that are provided to the business to correct themselves so that the numbers look better in future periods. Or the objective, every objective of the company would be only profitability. So the insights to deliver that profitability is also one of the critical role of a virtual CFO, which also happens to be part of his scope. See, people might sometimes, that is what actually founders expect that. Let's say very simple example, and let me tell you another example. Let's say when you take an outsourcing of accounting, you make certain payment without deducting TDS. So it might be a composite, both a purchase of good as well as certain service portion. If at all we do not deduct TDS, we oversee it and we make a payment as it is, and then tomorrow if something comes up, some notice comes up, then it becomes a black mark. So ensuring what is right is also very important. Compliances is also very important. At the same time, providing them certain insights with respect to how they can grow their business, how they can use these numbers to provide their own deliverables. That also becomes important. Yes, you are trying to tell something, Sunita. Sorry.
Yeah, there are a few questions. I was just wondering if you want to take them right now or wait for them.
No, we can take it now. We can take it now. So basically, the major intent of mine was to spell out the scope, what is available, what needs to be done. At the same time, what is the expectations? Probably in these questions, there can be something that can be answered. You can go ahead with questions.
So we have a question from CA Gitanjali, and she wants to know how to generate a lead for virtual CFO work. I think you've actually addressed that it is a generic organic lead that happens in the ways that you mentioned. What practice you have followed to get your first client? So this is the question specific for you. And what MIS reports do you usually share when you are actually fulfilling this role of CFO role? What various MIS reports are there? So two-way question. What MIS reports are being shared by you in your capacity as a virtual CFO? And what specific measures did you take to get that first client of yours?
Yeah. So my very first client was through a referral. It's again through a referral. Basically, one of the investor actually referred to me to his client. So generally, the situation was such that the client was facing certain challenges in establishing his own finance team. He actually wanted to focus on his growth and this thing. And the investor, generally, what happened? Investors have their own finance team who also take care of these startups. I mean, the investing companies. So certain times the investors also would wish to outsource. That is how I got. So basically, the way the first client we get is we need to go and talk to at least 25 startups. Very simple. We need to tell them this is what we intend to give, all of those things. That is how I did. I went and spoke to at least 25 startups, of which one of them was an investor whom I knew. The moment he got to know about this, that and all, he gave his investing. I mean, he sought certain help and assistance in investing company. And now coming to something important, MIS reports. Actually, the startups do not require any MIS reports. It's again the the funders. So basically, the lenders or the investors who would have put those monies into these startups, they require MIS reports. So slowly, it starts off like that. So very first thing is they would want to know bi-weekly profits. So every 15 days once, they would want to know what is their forecasted profit for the next 15 days. So that by end of the month, they know whether the target is achieved or not. And every corporate today functions on an annual operating plan. They set up their targets for every month. Every month, the revenue needs to be achieved, the cost needs to be within the budgets, the profitability needs to be in par with what has been planned. So then quarterly, in quarterly aspects, the fund flows come into picture, the cash flows come into picture. They want to monitor how their cash flows are. Is their working capital within the limits? Is the cost of working capital or cost of debt that is likely to be acquired or already acquired is within the limits? That needs to be taken care. So your entire MIS reports revolve around these three things. One is profitability, one is your working capital, one is your interest costs. So these are the three, basic MIS reports which runs about. Slowly now add-ons come into picture. Now your variance analysis comes into picture, and then your forecast with respect to sales come into picture. And now models, financial models come into picture, wherein they want to actually enter in, bring out certain product, bring out certain new product. Now, if I bring out this new product this month, should I bring it this month or should I bring it next month? Now build a financial model for that. So that is one set of MIS what we make for them. And then if the product has been already launched, or we provide certain things, we provide certain insights, we provide certain decision, we help them to take a decision saying that let us launch this product now. Now, after launching the product, is it in par with what has been planned? If there are any variances, what needs to be done? What needs to be, what should be the trigger, the action points that needs to be taken by these founders or companies in order to ensure that it meets the planned numbers? So basically, to cut it short, I would tell only these three things. One is your profitability, one is your cash flow, other one is your working capital. If these three things are in line, now all MIS reports revolve around these things.
CA Kalpana had a question. Kalpana?
Yes, Kalpana.
Yeah, thank you, Sunita, for allowing me to ask. So we will take this opportunity as you are here to address our query. In extension
Yes.
to what Geetanjali has already asked, you have mentioned that you have reached out to 25 clients initially. And if, say, for example, I want to reach out to those 25 clients as well, I also want to start this practice, from where I should refer. It is the existing client I am working for as a traditional CA
Yes,
practitioner.
that is the best way. That is the best way. See, you have your own network. Your existing client base would be there.
Okay.
Someone among your existing client base would be willing to start a startup of his own, or somebody in your existing client base would want to start a private limited company, or would want to go for an IPO, or would want to seek certain pre-IPO services. Those would be your creamy layers. You need to take those creamy layers in an initial point of view.
Sorry to interrupt, Harshit. So here, say for example, in those lists, so I'm just looking, trying to look at the practicality. Say for example, currently the client that I am serving, only one of them is of the category that they might be going for an IPO. Rest of my client bucket is not fit for, or they are not looking to outsource in that case. Or let's say, for example, like Sunita, she is not into traditional practice, she is more into trainings. So in that case, she's also interested. What is your suggestion to her, to these type of
Basically, see, when you are, if that is the case, see, when you are actually delivering your, let's say, for example, let us take the same example of whatever you said of Sunita. She is delivering certain training. She has certain space wherein she provides this training and all. There are certain candidates who will be approaching you for certain insights on entrepreneurship. There would be certain trainees who would be approaching you for certain insights with respect to how to set up, how to build a startup, or probably something. See, that is how you need to take. Let's say, for example, very recently there was one startup. I mean, in universities in Bangalore, they had invited students from multiple. I mean, one university, it is Jain University. They had invited multiple students from different universities to come and present their pitch. It was more like an inter-college competition wherein they'll come and present their pitch. So I got this. I mean, since I am also engaged into training activities, they had called me for as a judge, to be on the panel of a judge. So when I went there, I could see these young, bright minds coming and actually delivering their ideas, presenting their pitch, all of those things. See, this connects. See, today these are young guys. Tomorrow we never know. They might actually enter into the field. So the moment they enter into the field, probably if at all you build a relationship with them, they would obviously approach you. So I'm telling about this because since you said about training, in fact, a trainer has multiple opportunities as such. Because today every youngster wants to start his own. At least for starting his own, he wants certain guidance. Obviously, we would be giving those guidance. The moment he executes that guidance, executes his idea, he would automatically, it becomes a turning point wherein you can easily pitch. And now coming wherein you, for your, suppose your existing client base is purely your traditional practice where people are actually not intending, or probably they are not fit enough to go into IPO. Then, we need to choose certain, we need to go, again, one step ahead. Approach certain client who is somewhere in between, provide him certain insights which can make him feel that he is eligible for IPO. Probably he can go in that direction. Today, he is not having the thought. Why don't you build the thought in him? Today, he might not be fit. Today, that company might not be fit for IPO. Why don't you provide certain insights such a way, provide him certain direction in such a way that the company can go to IPO? Something like that.
Yeah.
See, again, opportunities needs to be searched.
Yeah, you have to knock on.
We need to knock the door. Yeah.
Right. So we have three more
Again,
questions.
yeah.
Sorry to interrupt.
Yes, please. Yes.
Yeah. So we have one question from Neha. So she wants to, she asks that How about the time allocation? How is that to be structured for each client, considering the broad scope of services that are involved, and what to be expected as a fee range for the service?
Can you just come again? Come again with the question, please. Sorry.
So Neha wants to ask, how are we going to manage the time allocation
Yes,
for
yes,
each
yes.
client? Since you mentioned that the scope, even though you get a scope, but it is, expandable.
Yes, Sunita, that is something very critical. The time we cannot commit to multiple companies or multiple corporates and then deliver half-baked cakes. I mean, it's always advisable. Start with one, only one. Start with only one. Try to understand fully what is our potential, what is the expectation. Are we meeting that expectation or not? Again, when it comes to business expectation, each startup's expectation differs from one startup to another startup. Because end of the day, they are also run by certain professionals, they are also run by certain intellectuals. If so is the case, expectations always vary. That is something very important thing. We need to manage time. In case of me, generally, typically for an early stage startups, how it works out is they expect us to deliver one full day in a week. Early stage, so probably at least when I say bigger startups. So somebody who has just babies, who has just started, just entered into the market, they would expect minimum 2 days, 2 full days or 2 working days in a month. So from this 2 working days in a month to 1 day in a week, it might take approximately 1 year's time. So by the time, but one major advantage over here is as the startup grows, we also grow with them. That is very simple. That is very clear. So as and when we start taking more and more assignments, more and more startups into our hand, more and more assignments into our hand, we need to ensure that we are also building a team internally wherein we also delegate certain things. Everything cannot be done in isolation at the same time. That is how I started the conversation. A chartered accountancy service can definitely not be in isolation. It is always a collaborated service. So it is always possible, definitely, as long as we build a team and we ensure we are planning properly, it is possible. It should not be a challenge, but at the same time, don't sail on two boats. We need to be very clear, we need to be very specific with what we are doing and recalculate our efforts that is being put in or our bandwidth that we are available with. That needs to be monitored very closely, very frequently. That is how we will get an idea as to whether we can take up new assignment or not.
So her second part of the question is, what should be the expected fee range that you charge?
Okay, expected fee range. So generally it is, let's say for example, in a startup, the cost of CFO would be around 3 lakhs. So 75% of that cost, I mean 3 lakhs per month. So 75% of that cost is the starting point.
Okay.
When I say a startup, it is basically a bigger startup. When they are babies, when they have just started, suddenly if you ask them for 2 lakhs and all, they'll better say, I'll better hire my own person. So it's again based on the business, what it is based on. See, now another advantage for a virtual CFO is entire numbers are with you. You know how the business is functioning. You know how is their profitability looking. Based on that, you can relook into your fees that is being charged. Probably initially you start with 50,000 per month. The moment you get to know their numbers and you also get to know your scope, probably you will get to know your deliverables, then automatically you can relook into these fees also.
So there
That
are
is
a few
one
more
advantage.
questions. Sorry to interrupt. Yeah, Anjali is asking, ideally the startups would be having an in-house accountant, or is this something that is given to a virtual CFO also, the accounting work as a thumb rule?
Okay, so 70% of the startups in India do not have a finance team.
Okay.
So if at all they have a CFO, the CFO would be part of the founder's team. So as a founder, see, generally what happens if you want to start a company, you need somebody who knows, I mean, let's say, for example, three or four friends who want to start a company. One of them would definitely be a finance guy or having certain knowledge on finances, because that is how they choose the team, right?
Mm-hmm.
If you want to start a company with your friends, you definitely will choose one person to be a marketing guy, one person to be a business guy, one person to be certain technical or AI or techie, or one person to be a finance guy. It's like that. If at all a startup is having a CFO, it means that he's part of the founder team. That is very, I mean, that is quite in. But 70% of the startups today do not have a finance team. That is why today the virtual CFO concept, fractional CFO concept is emerging.
Right. So one more thing that CA Kalpana wants to know is there any certification or add-on skills that we should, upskill ourselves with if we want to take up the CFO role?
Very important add-on skill is valuation.
Okay.
So, I mean, the entire startup ecosystem revolves around valuation. I mean, if valuation is a game, it's a game for raising funds. It's a game for running the business today. See, you would have heard unicorns. Everybody says, I'm a unicorn, I'm a unicorn. How did you become a unicorn? That's because of a game called valuation, right? So this is something very important skill. You need to be on top of valuation. Valuation courses are provided by our CA Institute or ICWA
Yes,
Institute. I mean, and there are multiple ways. I mean, there are multiple this thing for that. But having a top, I mean, being top on this valuation skills is something very, very critical. And at the same time, analysis is another, financial analysis is another
yes,
very important skill. I, see, if you recall, I have mentioned about this. Today, rather than numbers, startups, founders, as well as the management is expecting the numbers speak to them. The moment you provide them a report, the report should speak.
storytelling to
How,
world.
how will the numbers speak?
Hmm.
So that is a game again. So how we analyze the numbers, how we present the numbers, how we link these numbers of profitability, working capital, and cash flows to the company's growth, that matters a lot. So financial analysis is one thing, then valuation is one thing, and second thing, regular compliances, any compliances that comes into picture, be it corporate law or be it our taxation, indirect GST or indirect taxation. And definitely, this is something which even a traditional practitioner would be doing, but that also should be there along with that flow. See, at the end of the day, we should not tell I'm only a FP&A guy, I'm only an MS guy, I don't know about Ind AS.
Right.
See, end of the day, that is also important, right? Because you are now owner of the finance team, you are now the owner of accounting team. Your actual core accounting, core finance aspect should also be in line when we become a virtual CFO.
Yeah.
So
I
these are
see.
my recommendations.
Yeah, I see CA Kalpana has her hand up, so she has another query. Kalpana, please go ahead.
So, my question is to what Harshit was mentioning just now, that a virtual CFO should be looking at all the compliances. It was also mentioned that 60 to 70% startups are not having in-house finance team. So,
That
in the
is when
start
I
of
say
the
they don't.
session, Harshit, when I'm hearing you, this is giving me the feeling that virtual CFO is someone who will be looking after MIS report. He has to look all the compliances. The just now you have mentioned the uh, Ind AS, corporate governance. So, is there any segregation of responsibility, or the person who will be taking this role is supposed to know everything, jack of all, that kind of a scenario?
Yes.
In that
So
case,
your
when we are mentioning, you have mentioned, sorry to interrupt, that start with one. I think in that scenario, if the startup is of the sizable entity, if it is a sizable entity, you are the better person to actually term it in number. Then a chartered accountant as a CFO whole time will require to devote to couple of the clients. So then here the response. Yeah, now I would like to hear what's your take on this.
No. See, the moment the size. See, again, initially I happen to say this also, state this also. Companies today want to become profitable as soon as possible and set up their own teams. So this is something which I told when I answered to Sunita's aspect when she told about data safety or confidentiality. See, our market area is till the time a finance team is set up in the company. So that is our market space. Hello, am I audible?
Yeah.
Yeah. See, we have a game to play till the time finance team is set up. But at the same time, we should ensure finance team is set up in the company, because end of the day, we need to be ethical. At the same time, so when a startup actually grows, obviously they will be having their own in-house teams. So when you feel that now it is a time for them to hire a CFO, actual CFO, we have to quit from there, and either you can become yourself, leave all rest of the things, or if you have a very good practice, then you need to look for something else. So it's time to exit. Yeah, timing to enter is one of the thing. The time when we exit is also another important thing. So see, generally what happens, generally how the tendency is, to be frank over here, if the startup grows and becomes profitable, now a virtual CFO does not have any work. He'll be terminated. The contract comes to end. Simple. So
Okay,
the
because
game
the
of virtual CFO,
responsibilities and the numbers, the magnitude of operations has increased. So they want.
yes, exactly.
Okay.
Exactly. So generally the tenure is also like 2.5 to 3 years, maximum 3 years. So any virtual CFO assignment you take, that will be maximum for 3 years, not beyond that. In the 3-year times, they will get some seed funding, good funding, all of that. With that funding, a finance team comes off. So you will be there on the place, on the ground, till the time when the team gets a hang. The moment team starts getting hang, it's time for us to exit.
So you help them to set up their SOPs and
Yes,
operational.
yeah. Compliances, even team also. Team. In fact, I even get involved in interviewing the candidates. So, see, it's actual CFO role, Kalpana or Sunita. When you say virtual CFO, don't go by the word virtual or fractional. It is you are actually a CFO for the company. You have to think like a CFO. You have to own that. So you cannot compromise on any compliances. You cannot restrict yourself to one small scope. I will work only this. There will be calls in the midnight. There will be certain operational issues in the midnight, or there will be certain issues, just like how I said, bank lien. Lien marked bank account.
Right.
You have to go out of. You are a CFO. If you are a CFO for a company, what would you do? So
There's
that
one last
actually
question.
Yes, please.
Sorry to interrupt. There's one last question from Shashank. Now, he says that how can he be a part? Is there an impaneled network group or team on any social
There
media
are
online
many.
groups? So if you could just
There are
suggest a
many.
couple, or because he's actually been working as with 2 startups and he wants to carry this forward for himself.
Oh, great. There are many. See, in fact, recently, in the month of February, there was this WOFA that happened in Delhi. Over there, I got a lot of connections who are into this virtual CFO space. There are multiple people, especially in cities like Bangalore, Pune, Hyderabad. So basically, these 3 cities are majorly into startups today.
Like on LinkedIn, we have CFO group, right? So is there anything called for virtual CFOs in LinkedIn as well, or any other group that you
I
might?
am part of one group in LinkedIn. At the same time, there are multiple WhatsApp groups also that have floated. and Telegram groups are there. There is huge network for sure.
So all you need to
But
do,
only thing
Shashank,
is that for some reason,
find out.
yeah, for some reason, I mean, the moment a traditional practitioner listens to the word called virtual CFO, I mean, it's like different. I mean, he thinks that's a different world. Very frankly speaking, there are synergies between traditional CA practice and virtual CFO practice. See, me being a virtual CFO, see, I focus majorly. See, 70%, almost 80% of my business is from virtual CFO. 20% is my traditional practice. Now, I leverage this 20% of traditional practice, which contributes to my virtual CFO practice as well.
Thank you so much, Harshit. Do we have any other questions? We've extended our time. Thank you so much for actually
I hope
being available for the questions.
Thank
you.
you. I'll just share my LinkedIn this thing.
Yes.
Scan. So that if somebody is, I mean, like Shashank, if at all Shashank is still on the call, he can just scan it and connect to me. I mean, anybody who is interested, I mean, if at all you want to venture it out, you can just please be connected to me. I can also help you.
So Harshit, as you have mentioned, there are some groups to join for this virtual CFO thing to pursue. If you can share it with us so that we can share it in our community. So it will be helpful.
Sure, Kalpana.
If is interested.
Yes, sure, definitely.
Yeah, thank you.
In fact, this lot of the groups got created in WOFA very recently, probably in the month of Jan and Feb.
Yes.
So a lot of people like, and there will always be networking events that keep on happening. Obviously, in every cities it keeps on happening.
Yes.
Once you go with a mindset of virtual CFO, I mean, somebody will click and he will have his
what
network.
you seek is seeking you. I always
That's all.
believe in this.
Yeah, actually. Probably that's how we also met, no, Kalpana.
Yes.
I was actually interested into training. When the training part came into picture, that's how you introduced me. I'm very happy to be part of this session.
Yes.
Thank you. Thank you so much, Harshit. If there are no more questions, then I'll hand over this stage to Kalpana. Anyone else has a question? No. I did have a question, but we've actually crossed the mark. So maybe we have to have another session with Harshit. Right?
So, Sunita, you are having question. Please ask. So if our speaker is okay with extended five minutes more to address a apparent question of our moderator, so we can have that. Maybe someone else is.
No worries. Anyways, we have crossed 20 minutes. Another 5 minutes should not.
Yeah. So, considering the fact that these days we are hearing that again there is a slump that is predicted in the market for startups and all. So whatever unicorns we saw was during the 23-24 financials, right? So the year ahead are not that optimistic as far as startups are concerned. So what do you see the landscape for virtual CFOs in the next 5 to 10 years? Do you think that this is something that is going to take momentum?
See, today, one thing is very evident. Majority of the young crowd wants to start something of their own. Gone are the days when people will join a corporate, work as an employee, retire as an employee. Gone are those days. Today, the young crowd is such that they might join a company or corporate initially, then they want to start something of their own. So, I mean, that is enough in this market.
So next
maybe economically startups, see again, if startups are not doing good, probably if there is no financial strength to the startup, don't you think virtual CFO role is more critical over here? So that is when they come to a CFO, right?
Right.
when they feel that they want financial assistance, that is when we get hired. So it's indirectly a plus to us. I mean, a typical chartered accountant mindset.
Right. Thank you so much. Yes, Kalpana, I'll hand over the switch to you.
Thank you so much, Sunita. So before giving formal vote of thanks, we would like to present, Harshit, if you can allow me to share the screen.
Sure.
The certificate of appreciation for your valuable time and insight for our community.
Great. Thank you. I would look forward for more such engagements.
Apologies, there is some technical glitch in sharing the screen. Thank you so much, Harshit. Sunita, is my screen visible?
Yes.
Yeah, it is visible.
So it gives us immense pleasure to present this certificate of appreciation for the valuable insight and experience you have shared with us in last 1.5 hours. Thank you so much. So starting from the session, there were many questions. I will talk, I take my example as best sample for someone who was not knowing much about virtual CFO. Now, at 4 p.m., what I was knowing and as compared to how much I'm knowing now. So the virtual CFO is someone who will take charge of not only finances, but all cornerstone, including from profitability, cash flow, compliances. And it is not a easy task. It is about turning the business into profitability. And I believe, like me, our participant got that confidence that yes, this is something we can also pursue. And the credit goes to our esteemed speaker of the day, CA Harshith KS. And Harshit, I would be happy to announce that in the coming days ahead, we will work with our core team. If you can provide the mentorship and guidance to our community, if someone is interested to pursue this ahead, because 1.5 hour is something we got the idea how this path we can take, but implementing it and pursuing it as a full-time practice, I'm sure you'll be there to help, and we'll see how it works. We will see your availability and how it will be possible. So with that, it's time to conclude our today's session. Thank you to our speaker once again from the bottom of our heart. We are grateful for your time. Thank you to our wonderful moderator, CA Sunita Rathore, and all our backend team who is working tirelessly to make every session count in terms of adding value in our community, in growing together. Next week, we are coming with another exciting topic on the technical area. Till the time we meet next, keep learning, keep growing. Thank you so much for joining and learning. Thank you so much.
Thank you.
Thank you.
Bye-bye.
Bye. Have a great weekend, guys.
Thank you.